On July 1, 2019, the Government of Puerto Rico approved Act 60/2019, known as the Puerto Rico Incentives Code, which consolidates all current and outstanding tax incentives laws into a single code. Investors, traders, investment managers, and other high net worth individuals now have access to a tax haven tailored specifically to their needs. Puerto Rico is unique in that it is an unincorporated U.S. territory. Section 933 of the U.S. Code exempts Puerto Rican income from federal taxation in the United States. In this video, I'll explain to you how this tax incentive affects businesses in the export sector, formerly covered by Act 20. Also, how it affects you as an individual investor, formerly covered under Act 22, and how you can take advantage of all of these tax breaks as a U.S. citizen. So hang around for all the details. And before we head into it, don't forget to like and subscribe. Chapter 3 of Act 60 for Export Services and Commerce is a powerful tool for developing Puerto Rico as an international export service and commerce center by lowering income taxes and providing exemptions from property taxes, municipal taxes, and dividend distribution taxes for income generated and property used in exempt operations. If properly structured, it allows investors to participate in economic activities in Puerto Rico for clients located outside of Puerto Rico with very low taxes. Chapter 3 applies to companies that have a bona fide office or establishment in Puerto Rico and provide eligible services as an export service provider or an export commerce enterprise. The following are examples of eligible export service activities: advertising and public relations, call centers, consulting, development of computer programs, engineering, architecture, project management, hospital and laboratory services, including telemedicine, investment banking and other financial services, including advisory and broker-dealer operations, marketing centers, professional services, like law and accounting, research and development, shared service centers, voice and data telecommunications, and so on. Among the eligible export commerce activities are the following: assembly, bottling and packaging of products for export, commercial and mercantile distribution of products manufactured in Puerto Rico, commissions on the sale of products to customers outside Puerto Rico, purchase of products for resale to customers outside Puerto Rico, sale of intangible products to customers outside Puerto Rico, storage and distribution centers. Export services are eligible services provided to a foreign natural or juridical person located outside of Puerto Rico that are eligible. The export services must have a connection to Puerto Rico in order to qualify for the exemption. In general, services will be considered Puerto Rican if they are related to, among other things: 1. Commercial or for-profit activities that have been or will be carried out in Puerto Rico. Or 2. Advice regarding Puerto Rican laws and regulations, as well as procedures and administrative orders of the Government of Puerto Rico and its agencies. The entity involved in export commerce must produce at least 80% of its gross revenue from this activity. Exempt companies with sales of more than $3 million are normally liable to a 4% income tax rate on net income earned from the exempt operation. If the business volume is less than $3 million, the income tax rate on net income from the exempt operation is 2% for the first 5 years and 4% thereafter. The income tax rate can be decreased to 1% if the exempt entity engages in a novel pioneer activity. Act 60 establishes a base period income limitation on income tax advantages for enterprises that were engaged in the eligible activity in Puerto Rico prior to filing the tax exemption application. Distributions of dividends or profits earned by the exempt enterprise are tax-free in Puerto Rico. Exempt companies with a gross revenue of more than $3 million are entitled to a 75% exemption from personal and real property taxes. Property tax exemption is 100% for the first 5 years and 75% thereafter for enterprises with a business volume of $3 million or less. Municipal license tax exemption is 50% for exempt companies with gross revenue of more than $3 million. If the company's annual revenue is less than $3 million, the exemption is 100% for the first 5 years and 50% after that. There is an employment requirement of one full-time employee resident of Puerto Rico, who can be an owner-employee, for enterprises with an annual business volume of more than $3 million. Businesses with annual sales of $3 million or less are exempt from the employment requirement. The tax exemption duration is 15 years, which can be extended for another 15 years. To reap the benefits of Chapter 3 of Act 60 for export services and commerce, the company must request and receive a tax exemption grant. Act 60 states that the grant shall be considered a contract between the enterprise and the Government of Puerto Rico, which means it cannot be changed unilaterally and will not be affected by Act 60 modifications adopted after the grant is issued. Chapter 2 of Act 60 for individual investors exempts all interest and dividend income, as well as some capital gains, from Puerto Rico income taxes once the individual becomes a bona fide resident of Puerto Rico. Chapter 2 applies to any individual investor who becomes a resident of Puerto Rico on or before December 31, 2035, provided that the individual was not a resident of Puerto Rico at any time between January 17, 2006 and January 17, 2012. A Puerto Rico resident is an individual who is domiciled in Puerto Rico. Physical presence in Puerto Rico for a minimum of 183 days during the taxable year creates a presumption of residence in Puerto Rico for Puerto Rico income tax purposes. Section 933 of the U.S. Code states that income derived from sources within Puerto Rico by a bona fide resident of Puerto Rico for the entire taxable year is not included in gross income and is exempt from federal income taxation under the U.S. Code, the Section 933 exclusion. Section 933 treats an individual as a bona fide resident of Puerto Rico if the individual, 1, meets a physical presence test, meaning that the individual and likely immediate family must be present in Puerto Rico. 2, meets the tax home test, which requires the individual to not have a tax home outside of Puerto Rico during the taxable year. And 3, does not have a closer connection to the United States or a foreign country than to Puerto Rico. This is known as the closer connection test. Individual investors will be exempt from Puerto Rican income taxes on interest and dividend income during the exemption period under Chapter 2 of Act 60. Furthermore, Under the Section 933 exclusion, an individual investor's interest in dividends that qualify as Puerto Rico source income are not subject to federal income tax under the U.S. Code. Individual investors who are U.S. citizens or resident aliens, on the other hand, will be subject to U.S. federal income tax on non-Puerto Rico source interest and dividends. Gains from the sale of marketable securities, commodities, currency, and digital assets based on blockchain technology, acquired after the individual becomes a bona fide resident of Puerto Rico, are not subject to federal income tax if sold during the period of residency in Puerto Rico under certain conditions. Non-marketable assets and marketable assets acquired prior to the establishment of residency in Puerto Rico are subject to special rules. Individual investor tax breaks granted under Chapter 2 of Act 60 will expire on December 31, 2035. Individual investors must fulfill the following criteria. 1. Contribute a minimum of $10,000 per year to local nonprofit organizations that are not controlled by the individual investor and are certified under the Puerto Rico Internal Revenue Code. Half of the donation must go to organizations working to eradicate child poverty. 2. The individual investor must purchase real estate in Puerto Rico for use as his or her primary residence within 2 years of receiving the grant. The property must be owned solely or jointly by the individual investor and his or her spouse. And 3. Submit an annual report to the Government of Puerto Rico, along with a $5,000 filing fee. Individual investors must request and be granted a tax exemption in order to reap the benefits. Act 60 states that the grant shall be regarded a contract between the individual and the Government of Puerto Rico, and that it will not be affected by Act 60 modifications, adopted after the grant is awarded. In order to lure new businesses and high-net-worth individuals, Puerto Rico passed this aggressive piece of legislation. Puerto Rico, as a U.S. territory, is uniquely positioned to offer incentives that are now unavailable anyplace else in the world. You can drastically reduce income, capital gains, and dividend taxes if you are willing to establish bona fide resident in Puerto Rico. By relocating to the island, one might effectively reduce their combined effective tax rate from as high as 50% to merely 4%. And with that, we come to the end of this episode. Thank you for watching. Until the next one. Peace.